Hello, 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 everyone. Mike Arnold here, co-founder, Pat Trading Partners, along with the soon, hopefully to be here, Bob Iacchino, swimming in a sea of green. Doubles are still playing out. Good afternoon, Davey. Good afternoon, George. Good afternoon. Welcome back, Anissa. Good afternoon, Patrick. Hello, that's like M1KK, that's like a Mikey 78. Hello, good day today. Good afternoon, William. Beautiful weather. I hope we're having some decent weather. Got up to 73 degrees and sunny here today. So even though I spent a lot of time inside, the dogs like to be outside though, so that was a good thing. Again, hope everybody could take advantage of some trading opportunities today. You see pretty much green in a lot of areas across the board. Remember especially then when the riskier assets go on, things like healthcare go off. Energy, even with energy rallying, though, I'm telling you, the stocks are looking toppy. So again, can't give specific trading advice, but look to raise your stops. Oh, you live in Chicago? Well, there you go. I didn't know that, William. So, well, then you know it's a nice day. Very good, everyone. Let's get through some house cleaning stuff before Bob shows up. Let's see. So for newer people here, please do consider subscribing if you have not already. Ringing that bell so you know when I do go live, especially for the emergency live streams, and hitting that like button longer term. Subscribers, please come back, leave some comments, and like or dislike the videos. So, where do we sit here? All right, tomorrow, NFP Friday, Non-Farm Payroll Friday. That's coming out at 7:30, 30 minutes before our live stream, so we will get to cover that and prep ourselves for tomorrow. Not expecting any major surprises, but you can got prepared for anything. Although it seems like any bad news is good news. Bad news is good news. The worse the news, the more we'll rally the markets. And the more hawkish the Fed sounds, the more we'll just buy everything because the Fed will blink and, so good news is bad news. Good news is definitely bad news. So what do we have? In our non-farm payroll, then at 8:45, we have the composite PMI final on services. 9, we have ISM non-manufacturing PMI. So we have a lot of stuff going on tomorrow. And then, oh, wonderful, we have more Fed speak at 9:30. Yay. What more can they say? FOMC, remember, on the 15th. We're pretty much at 100% for that 50 basis point hike, and we're closing in on neutral gamma, but that negative gamma sure took a hold to the upside, although it is waning quickly. That full gamma flip area is 42.43 according to those metrics. So that's where we sit. By the way, was watching Lulu. That was some whipsaw moves. They beat earnings. They did a slight guidance higher, but then they said revenue would be down. It was confusing as all get out to me. It was confusing. So that was getting whipped. It was up and then it was down. So that was some interesting market action there. You see here, I'll bring on Bob in a minute. S&P up 188 basis points and Nasdaq up 270 roughly, and Dow up 134, Russell up 239. It was definitely shift into the riskier assets. Even stuff like Tesla up 4.68%. What was ARK up today? ARK up 7.36%. So we are not done with buying the crap. Buy the crap mode. All right, with that, let me hit the special Bob button. There we go. Bob, you are now live.
The Bob button.
The Bob button. You look like a Smurf.
I feel like a Smurf.
You have a very blue Smurfy shirt on.
Who was the other one who was doing dad jokes like you do? Who else was that?
Who was doing what jokes?
Last Tuesday, somebody else was doing dad jokes as well.
I don't remember. So, yeah, William, remind me afterward. It's more important to have Bob and here's commentary. First and foremost, in the front of everything before we get to the charts. I mean, Bob trumps charts.
That's right. That was George.
You should. Oh, hey, George. Yeah, I love seeing the new names and faces. Buy the dip equals buy the crap. Yeah, we're getting people like Anissa is here. She's been tuning in regularly. Patrick's becoming a regular. We get there's new people popping up, and they keep coming back for more. Bob,
They do keep coming back more. For the life of me, I don't know why.
for, well, I am a famous YouTuber, Bob.
You are. You're an influencer now.
Oh, look, we got Christoph in the house. Welcome. Hello, Christoph. So, what are your takes today? What did you want to cover, Bob?
So the economic calendar I thought was important. Obviously, we got non-farm payrolls tomorrow. The number has climbed higher as the week is going on. It started out the week with an expectation of about 300,000 and an unchanged unemployment rate with a slightly lower average hourly earnings. And that's all shifted now to 325, a drop of 0.1% on the unemployment rate, and an unchanged work week and average hourly earnings. I thought that was interesting given where the ADP came in.
Yeah, ADP missed pretty well.
Yeah, ADP was a really bad number. Now, I have to tell people that there's no correlation that I've found between the two in terms of the depth of the miss. What I have seen is a mild correlation between whether they miss or beat, but it's mild. It's like 0.6. It's not massive. But certainly it goes from ADP misses, non-farm payroll misses about 60% of the time. Now, in thinking about everything we've talked about in the last few weeks, how, I prematurely called a medium-term bottom, and then we got the double trigger, which I'm sure Mike will talk about. Bob Trump. I'm not sure I'd go that far. I do not like Donald Trump at all. But anyway, take it from that perspective. The non-farm payrolls number is the kind of thing that could trigger that move higher, right? Before the market then settles in and starts to sort of reprice in a lot of what's been going on. So back to the data we had today, some of the lesser looked at data, unit labor costs, for example, unit labor costs beat by quite a bit.
Yep.
Now go ahead, Mike.
Yeah, I was just going to say that did beat by quite a bit. That's 12.6 versus 11.6, a percentage higher, 100 basis points higher.
Right. Now it's looked at as kind of old data because it's Q1 and we're about to enter the second week of the last month of Q2. So it's looked at as a little bit older data, but still it was revised higher. Factory orders missed pretty badly. Jobless claims came in better. It's a weekly number, but last week's was revised worse. So the data again is starting to come in softer and softer and softer, not dramatically, but still softer, right? So from that perspective, you could see where you might get a little bit of a miss on hourly earnings. Again, I'm just speculating. I don't have anything to base this on. Maybe a little bit of a miss on jobs creation. People start potentially talking about, okay, the economy's starting to slow a little bit, and they start this narrative again where the Fed doesn't have to be as aggressive as they thought, even though most of the Fed speak has completely flown in the face of that narrative. Even Raphael Bostic going so far as correcting himself. Did you see the Raphael Bostic correction?
Yeah, I put that up the other day.
Okay, so basically that's been the Fed speakers have tried to tell us that they're coming after inflation. The consensus now is that the Biden, Yellen, Powell meeting was basically to give the impression that, never mind, inflation is the number one thing. I'm kind of backing off my 2 more 50 basis point rate hike and pause stance, but I'm not completely backing off of it as well. Oh, Anissa came from Ninja Trader. That was nice.
So you're backing off, but not backing off.
Well,
You're really.
I'm basically not going to bring it up as a core thesis anymore. I still don't believe that they have the political wherewithal to deal with that second wave down that I think is coming. We've got our doubles triggered. That puts in the bottom we've been talking about for weeks. This is a bear market rally. It is not a move higher. And I still maintain that when you look at the Nasdaq, which has basically led over the last 10 years, and the Russell, which the small caps have led historically, right? Historically, the small caps outperform the S&P over time. The Nasdaq has led the S&P over the last 10, 12 years, and those two went into bear market territory. So you have to believe that the Dow, which is only 30 stocks, and the Nasdaq or the S&P, which is kind of a blend, has the power behind it, the earnings behind it, to pull the Nasdaq and the Russell up out of bear market territory and up to new highs. And I just don't believe that's the case seeing the data. So I'm going to go ahead and ride this out. I've got long positions in equities, and you guys know that I am long crude oil still. Today's crude oil price action, by the way, very bullish to me, especially given the announcement for a doubling. Okay, so let's talk about that OPEC real quick, and then I'll just kind of let questions come if there's any. That's a very bullish candle right there, but also OPEC decided to basically accelerate this is a reduction of production cuts. These are not production increases. They're taking back the cuts that they started basically in 2017, 2018. And they've accelerated the timeline of taking back those cuts. Now, if Russian crude oil goes completely off the market, which I don't think it will because India and China have no dog in this fight at all, India especially. India was probably down at the 6th or 7th slot of Russia's largest customers. They've jumped up to number 2 during this time because they're doing discounted crude oil. Russian crude oil sells for about $78 a barrel. Now, Russian crude oil is closer to Brent than it is to WTI. Brent has about a $15 premium to WTI right now. So it's at a massive discount. So India has taken advantage of that discount, which they should. They're not part and partial to the sanctions. But Saudi Arabia and the UAE do not have the capacity to make up all of Russia's production. They just don't. And that's likely what happened here. You got a little bit of a sell-off with the leaked story in the Financial Times that Saudi Arabia was about to accelerate these production increases. They announced it, and then people started realizing they weren't even making their quotas for the recent production increases. So why would this matter? And it doesn't from a supply and demand perspective.
Yep. And we had that double trigger this morning, a reversal pattern, full target and more, and now we have closed above that key 62.5 number, rejected 2 candles in a row. Today was the close, so even on pullbacks, we could easily be targeting statistically close to 126. The stats play out that's the this now is the next major target area, with the, in the 70%.
Something else, if you could put up Patrick Musto's comment real quick, Mike, on the crude oil front.
There you go.
One of the things people don't realize, strategic reserves down to 28 days. Today's draw on crude oil was about 3.5 million higher than expected. And the gasoline, we expected a build of about 500,000 barrels, and we got a draw of over 700,000 barrels. So the demand is showing up. The refinery utilization number was down a little bit, but I'm hearing from contacts. I have a friend who owns a refinery actually in Indiana. He said they can't get all the crude oil they need, and that's where that little drop comes in from. But where Patrick is talking about the strategic reserves down 28 days, that's the issue with when you do massive releases out of the SPR, the Strategic Petroleum Reserves. At some point, you have to fill that back up. And that actually puts a floor in prices for a while that people don't think about. Because the government obviously wants to buy it back at a cheaper price, but at some point they have to buy it back. So they're going to come in as a buyer at some point to rebuild those reserves that Patrick is talking about. So they end up becoming a buyer after trying to ease the prices within the market. It's really an ugly situation.
They're going to be releasing low, buying back high.
Yep. I
It's
saw you laughing. I knew that was coming.
that. I mean, also, yeah. I mean, I'm not like I don't have as many people that you do based off the oil stuff. But the feedback I was getting was essentially they'll take all the oil they can get and they're going full force and utilization, and the only thing holding it back is that sometimes they don't have enough.
Anissa
So
can vouch that I talked about crude oil going up the last time I did a Ninja Trader thing. So, and I still think it's going higher. That target, what did we have it, Mike? 121 and change on the first one?
the next one is 121.22 area, 121.20.
Yeah.
So we should easily see that. Then I'm expecting at least 125 to 130. And then we got, if we break above there, we got 139 and 147.
Mhm.
So could we see a buck 50 oil?
Yeah.
Yep, we
Yeah.
could.
I mean, I always want to see, it tends to blow through. I think that high is 130.50. Tends to blow through there a little bit. And then there's a ton of long liquidation selling.
Mm-hmm.
People that just naturally look at the old highs as a target. Rarely do we hit the exact old high, right? That rarely happens. Um, so I suspect we'll blow past that a little bit, maybe hit 131 and fall from there a little bit. But then, yeah, that second move higher, certainly.
Yep. I still, whenever I look at this monthly chart, when we have a minus 40 on here, how far we've come. Can I get minus 40 back? That would make my gas cheaper.
Would be nice.
Maybe they could buy back on this candle and fill up the reserves. Oh, boy. The good old days with cheaper gas. Let's see. Cocoa, Saudi Arabia can't replace Russia oil. Oil to 150. Cocoa thinks oil 150.
Coco is correct.
Uh, Christoph, what do you guys think about mining stocks? Got beat down quite a bit. Still very low PE. Do you have
I
any?
mean, I don't hate mining stocks, but we're long gold. So, um, I'd rather be long. I've talked about this before. The only thing if you believe that um, precious metals, or you're talking about mining in general, copper stocks, things like that, just general mining. If you believe that stuff's going higher, I'd rather see you buy the actual commodities, because if you have an interest, or if you have an opinion that the commodity is going higher, I'd rather see you buy the commodity. But otherwise, I mean, I'd have to look at the charts. I don't, I'm actually doing a webinar for the CME group next week, Tuesday morning. So I'll be in here Tuesday afternoon. But next week, Tuesday morning, on the launch of their new micro crude options. And one of the things I talk about is the stocks versus the commodities in this particular issue. As a matter of fact, go ahead, Mike. I'm going to send you a slide from that, Mike. I'm going to have to email it to you while you're talking here, but I'm going to send you a slide really quick. Now, I'll just tell you. Basically, if you look at the crude oil chart and then you look at Valero, for example, Valero and crude oil are correlated, but not as highly as you might think. You look at the spike to 130.50 there at the beginning of March, and watch what Valero did at the beginning of March. Nothing. I mean, virtually nothing. So, if you have an opinion in the commodity itself, which I assume, Christoph said no mining in general. I mean, I would guess you would have to have an opinion that the commodities were going to be bought. But I mean, I don't hate mining stocks in a low PE in an inflationary environment. Certainly, you want to look at commodities in general if you believe it's an inflationary environment.
Yeah, I like the mining stocks. They just, you just have the timing can be a little rough on them, but I like them overall
Mm.
because we're still commodity bulls, and you got to get the stuff out of the ground.
Yeah.
So whatever it is, you got to get it out of the ground. Uh Futures must be pumping because Peloton's going up.
Well, take a look at futures.
Well, futures. Well, let's take a look at the Nasdaq. See that? Well,
Rich, do you not have access to futures? At least the quotes? I mean, I'm
so
seeing the Nasdaq Go ahead, Mike. You got it up there.
Yeah, Nasdaq. I mean, it's still. Let's see what it's doing.
Seems like it's
It's
still at the
just
high.
slowly grind. I mean, it's slowly grinding up into the close.
Yeah,
After
it's not flying, but it's at the highs.
it's slowly grinding up. It's again big rally day. Double was triggered. Then people, you got to trade. It's the feedback I keep. People don't get it. Like on Microsoft today, we had the double trigger, got up to the first stop reduction, gap down on their guidance with their FX, dollar strong and guiding lower, and look at this didn't stop it out.
Nope.
But I talked to somebody on the open. They puked it on the open. They're like, your double's wrong. It's not going up. I don't want to hold it because I'll get stopped out. The stop was down here. They didn't want to hold it because they're like, I'm gonna lock in, the smaller loss because they got long up here. I'm gonna lock in the smaller loss instead of taking a bigger loss. And
I had a friend who talked to me. He said, you were looking at this double. Did it trigger? This was on the 31st. I said, yeah, it triggered. So he bought the QQQs on the open. He bought them at 310. And he said to me, they're at 303. I said, I told you what the stop is on the QQQs. It's not 303. And I said, did you not measure out your risk again? He's like, I'm getting nervous. I said, then get out. What do you want from me? Okay, we're nowhere near the stop on the QQQs. We're not even close at 303. And then today he's like, well, I stayed in. You were right. I go, I'm not right yet. The pattern's the pattern.
it's what and I keep getting this, long term you're bearish. How can it keep going up? Well, it's bad news. How can things go up? Well,
it's not about right or wrong. This is a pattern with a probability. That's all it is.
And the probability isn't 100%. But the probability, I'd rather be with something that's 70% than with on the side that's 30%.
It's
I'm
higher
sorry.
than 51%, and the reward to risk is right around 1-to-1. So over time, actually, as it moves higher, it's better than 1-to-1.
So let's see. Is this what on the S&P? This is this is one of those iffy ones. It's still a potential double. You have now a double within a already triggered double. So theoretically, if we came down below yesterday's low on a closing basis, we could map that out for the pullback. And the Nasdaq is a double within an already triggered double. And the Dow is a double within not already a double. Because there wasn't a double on the Dow. So yes, those are the patterns. But even like today, remember I talked on the live stream this morning, we had the flag pattern. We also had a double, and I said I was watching. It needed to be that 4-hour close. It wasn't just I wasn't watching for a little break because you see, boom, boom, boom. There wasn't even a break in a rollover test. It was just a poke in it, and then rally up. That got a lot of people sucked in. But that 4-hour double never triggered from a closing basis. That's why I left it on here. And we took off. So that's where we stand. So now, see, this is where it gets a little lower probability because the Nasdaq is technically a triple top on the 4-hour, but you're going to have a double on the daily that's a little sloppy. So it's an interesting pattern. When that happens, it's lower probabilities than the normal ones.
Right.
But yes, if this did trigger, and it would have to trigger for me on a closing basis. You could then get the bigger pullback, and if I was going to map that out just for giggles, and it's lower probability also when the low is on one side, like this is on the right hand low. It's slightly lower probability from all the testing, but where would that take it back to? Look at that third target is a 62.5. And you'd need a close below the 62.5 on that daily basis to confirm a retest of the low area. So theoretically, this could trigger, come all the way down, fill all the targets, not get the close below that 62.5, and then still go up again. Theoretically. Don't expect that to happen, but this market is expect the unexpected. So, who knows? Who knows? I'll have to map that out exactly right. But where would that put it on the S&P? That would again put the final target just below the 62.5, but it wouldn't have to close there. So it would come down, and the second target is right between the 50 to 62. So yeah, Christoph is still in Microsoft. That's why you gotta stick with what. I applaud you, Christoph, because again I know somebody who puked it out because they're like, I'd take a small loss versus a bigger loss. Well, now they'd be up again because it didn't hit the stop. They second guess the pattern. Could the pattern have come down and hit the stop? Yes. But that's why you position size, and that's why you know where your stop is, and you stop second guessing the pattern. And when it calls to raise the stop, you raise the stop. And you don't get emotionally attached to things. Because the moment you think you know what the market's going to do, it's if I had $1 for every time I thought I knew the market was going to do, I'd own an island, literally, because I think, that number's bearish, and then it rips your face off rally. I think that number's bullish, and it pukes down 200 basis points. It doesn't matter. That's why it doesn't matter what I think. It matters what the probabilities are. I keep saying that to people, and they don't get, because a lot of people don't have anything to do with probabilities. They just, I think this is a long here, or I think this is a short here. Well, based off of what? And what are the odds? They don't have them. But, by the way, look, we have Nvidia. This was a thing of beauty today. The double triggered. We got the nice little pullback to the trigger point on Nvidia. And then intraday, look at this. Intraday, you got another little double pattern that reversed this move and this is where, when I see something like this after a pullback, this is where I will roll. This is where I will use it. All right, we got the pullback, and then we got that little double. Instead of just taking everything off at the double for the 15 minutes, that's where I'll roll it because it's rolled into a bigger pattern, essentially. This was a nice floor to get in on that daily double if you weren't in it already. But I mean, we're within a few cents. This was definitely raised stop area with stuff going on tomorrow because we're within a few cents of the first target there. So that's where we sit. Let's see. Whales bought a lot of puts today, and depending on your timing, I can't argue with that either because I expect another rollover play at some point. This is actually a gift. These rallies are a gift for reestablishing longer-term bearish positions. I mean, hey, I'd rather put on. Where do I want to put on new bearish positions? When we're down here after this big sell-off, or more up here when we complete some of these patterns? I'd rather be putting on the bearish positions back up here for the next rollover play, not down here. Double bottom in VTV means value stocks could rally back to all-time highs. Yeah, VTV. Then we'll get Bob back up. Yeah, it could take it back up to there. Look at this. Look at that with the 62.5 right there. 80. That would. And funny thing is, you get the close back above the 62.5. Where does it target? It targets the 87.5, which is also the target for the double. Oh boy, I hate when things line up. What are your thoughts, Bob?
On what?
On life in general.
I hate when things line up.
Nasdaq always follow the SPX. Not always.
It doesn't. Take a look at the second week of January. S&P was down, Nasdaq was up on a weekly basis. So it doesn't.
It doesn't. They have a positive correlation.
And it's high, but it's not.
But they do not always follow, and one will and depending on the market conditions, one will outpace the other. And they don't always.
Everything was negative yesterday. The Nasdaq was the best performer, and then Sheryl Sandberg decided to resign before the close, and the Nasdaq became the worst performer. that very well could have been an S&P up with a Nasdaq down had they been closer to the flat line at the time that happened. They don't always follow each other. It's just, you know what, Rich, you're correct. The thing that's wrong about your statement is the word always. And we're very picky about that kind of stuff because we're trying to get it into your subconscious that there is no always. It literally doesn't exist.
Yeah, so and you also, that's why you do the analysis, because like, all right, we had doubles in the S&P, right, that triggered, doubles in the Nasdaq that triggered. There was no double in the Dow. Does that mean the Dow can't rally? No, the Dow has been rallying, but you can't use the same targets and you can't have the same probabilities. So here we go. Joseph, appreciate another great analysis, Mike and Bob.
Thanks, Joseph. I want to. Is there any other questions for me? If not, I'm going to probably pop on tomorrow after non-farm.
Sure. I'm just looking.
Somebody asked me about the Amber and Johnny Depp.
Yeah, that was Kalani. Kalani wants to know your thoughts on, or Bob's specific opinion, because they know I don't follow that crap at all.
I'm not a massive Johnny Depp fan. I liked him in 21 Jump Street because I think him and I were the same age at the time. I was pretty sure I could take him back then. But anyway, Amber Heard's trash, so I'm happy with it. That's it. That's all I got for you.
There you go. Well, I think we'll leave it. I don't see any other questions. So if you want to jump on tomorrow, to do a quick analysis of non-farm payrolls with me.
Yeah.
Live at 8.
Text me and remind me because I'll be in the midst of researching a Bloomberg piece I have to do. And
okay. Well, I'll text you right when I'm starting the countdown.
All right, cool. All right, guys. I'll see you guys in the morning.
Thank you.
See ya.
Hey, everybody. Let me get to small Mike. You don't need big Mike anymore. You just need small-headed Mike. Hey, there you go, Lord. No emotion trade plan levels. Yeah. And you got to sort of be a robot in this. To be really good, you got to be a robot. You can't be like... That was the whole thing. Not to get back on the subject of Kramer that we beat to death the other day. But where he's screaming and everything, especially during bull markets. He's like... That's the way he was with his fund, too. Because I was in New York at the same time as that. And he would be yelling, throwing monitors around the room and everything else. And that's not... Yeah... No, trade like a robot. Yeah, it's hard. It's hard because you can get emotional, especially if you trade too big with improper stop placement. You can get very emotional, but the moment you can learn to just plan it out and realize the probabilities play out in the long term, you'll do great. Thank you so much for the super sticker, Lauren. Thank you. I can't wait till they make me able to see the hippo character standing idle whilst his new and most powerful body attachments do their thing. That sounds bad reading it. I probably shouldn't have read that out loud. I imagine the graphic super sticker is very different from the way that sounds verbally. Yes, like a computer. Stick to a plan, always trade trend. You can trade high... probability counter trend, but you have to stick to your plan, and everybody should have a trading plan here and practice patience. How do you like the setup on spot and TMO? Let's see. You're just tapping that other side of the thing. So it's slightly lower probabilities, but you can definitely, it could be a short-term bullish trade in there. I just watched for the longer-term rollover again. Cycles are at the top, so if you're not in it already, I'd potentially watch for a little pullback. Weekly, still turning up and getting to the top, so... That's not probably going to be the strongest one. TMO. Ugh. I don't think that does not qualify as a... You can see I haven't looked at TMO in a bit on this platform. There's a lot of stuff going on in here. and the double doesn't work because so it would just be a break to the upside play. I can't. This would be a play I'd avoid. To this stuff, you have this little slop. This is very sloppy. I don't like that play at all. I'd be looking for some stronger ones. If you're trading this double, that was the other weekly one I was looking at. Let's see if this daily works. This is see, this is way too slop. You see this extra hitch in there with the highs on this side? I'll map out the targets, but I can tell you from my research, when you get stuff like this, the probabilities do drop. And really, I'd probably just use on a run up this. I'd probably just be trading this very short term swing and use that 593.94 as a target with a tighter stop on that, just due to very sloppy nature and this little peak area right in there. So I'd look for better plays. I mean, that's not as clean. I mean, the Microsoft one was really clean. This one technically came close down to the stop, did not get closed below the stop level, and now this is AMD we talked about a long time ago. Then I for some reason didn't update it in here, but didn't come down, didn't hit the stop reduction level, so you got to keep the stop. The first initial stop did not close, and now's finally hit the first target. But this was a pretty decent clean pattern. It had a little bigger reactionary. Now stop reduction has to come in. But those are definitely cleaner patterns. What else do we have? Amazon, again, pause at the first target, pause at the second target. Looks like we're going to complete, not guaranteed, but looks like we're going to complete the final target before the stock split. 25, what is that target? 25, roughly 25.47. I know we want, let's see, we will, thank you for being here. Nice weather, William. Oh, wait, I was on the wrong thing. Walmart. Now you're a long way, see, we're still a long way off from there. You know, I'd play this as a potential rotation play to the upside. So my stop on a closing basis would be about below 122. And I'd be at least targeting for a stop reduction at the other side of the daily rotation zone, which would take me right there. I'd be using 133 as a stop reduction because we still have this gap fill right here. Look at the first harmonic is the same as the gap fill. So that's even a stop reduction. I'd then play another stop reduction there. And then I'd be watching for a target 134.89. I'd have to map out if I could get proper reward to risk on this, because my stop to invalidate it would have to be below the 62.5. Okay, but there could be some upside continued price action in Walmart. This is actually a pretty decent play. Not yet at a double top. What's interesting enough is if you came up here, formed a double top, then you could actually keep an even tighter stop with that would, you know, on a closing basis that would trigger the double top. That's how I like to do that. Let's see, where are we now? I lost. Yeah, I forgot to cover Tesla. The best gift would be a 950. Tesla. This is not a double, by the way. This extended too far, so you cannot trade this as a double. If you got the move below today's low, it would be a gap fill. Then I'd be targeting the 50 and the 62.5, but not the double. And I got to raise those levels anyways. So, and look at that, the gap fills now at that 50. To the upside, I have a major with this little pattern right here. On a continued push higher, 819 to 827. There's about 1, 2, 3, 4 key things, and then right above that's the 50-day. So that's a major target area for me. And the cycles are looking like they're trying to roll over, but you still got room on the weekly for a little more upside push. So if the Nasdaq keeps unfolding that double, this could easily again push higher. Can you look at end phase? You want the 1 hour? Upside downside projections. Hold on, I gotta do the little cleanup here from our past stuff. When we closed, I remember when we closed above the 62.5, and then we did go fulfill that and take out the new highs. Let me just get my reverse harmonics on here first. Look at that thing of beauty. Kabam. Now you're going to want to do your short-term harmonics from this little pullback to here. So I have to look at the, let me just see where that sits. Yep, that's right. Perfect. All right. So my key support with this rising 1 hour rotation zone would be about 191.30 if it pulls back into that prior breakout level, 191.30. And you got the 4 hour closing up on this. So on a pullback, and that's prior this peak high, you based right before it. You got the rotation move up. So this would be the key support level, the first key support level. Then minor would be 203.16. You see we're getting that little pause at that 286. I'd use this as stop reduction. I'd use this one again as stop reduction, 205.69, and I'd be using a 208.85 potential bigger target. Depending on what you are, again, can't give specific trading advice, but that's your decent area up there. I just want to see if we come back to the medium-term harmonics. No better information there. So daily, again, little sideways correction, letting the 8 catch up in your breakout move, and a key close. This is the highest close. Again, this is the highest close since back. Wow. This is the highest close since 19th April. So that's a pretty strong move. So yeah, that's how I'd map that one out. STNE. STNE. Oh, geez. I guess they beat on earnings. Yeah. Yep, another. Well, we're back into the, I mean, back into the profitless companies, which doesn't surprise me based off of this price action. But I bet you, it'll start rolling over again once the market does. We're at the top of the weekly rotation zone out of very oversold conditions and cycles hitting the top. So I wouldn't be chasing that if you weren't in it already. Nasdaq does not always outperform the SPX. And there you go with that always again. It outperforms at certain times, and at other times it underperforms. What did I miss? Is SPY going up or down? Are we ready for a reversal? You better be joking, John. You better be joking. Again, from the spider perspective, we already looked at this. Spider perspective, again, oops, didn't mean to move that. Still marching on up towards the first target, 420. Stalling out right now at the 50, but we could easily see this first target tomorrow. cycles again at the top. It's pretty much the same analysis as because it follows the S&P, but you still got weeklies enough ways, and I would be focusing on the first and the second targets only on this one. That's where we sit. I also check ICE, such a nice clear path. ICE. Yeah, that is a nice clear path. And you still have an unfilled gap higher. Yep. That one's definitely a nice potential play. Just want to check that on the weekly. And look, it can easily complete the double. Just want to see where this lines up. Yep. Oh, look at that with that gap fill. So double. And then there might be a play for a longer term gap fill before another potential rollover. But that's definitely a nice upside play in ICE. For the double to work, it has to be in the daily or 4-hour chart. I'm still learning how to tell if double valid or not. You can have a double. I mean, look, we had a double in crude on the 15-minute/1 hour chart. You could trade them. The doubles on the higher probability on the higher time frames have higher probabilities. And when you're learning them, that's why I stress waiting for a close. Once you've got really good at trading, you can start not waiting for the close if you know how to read price action pretty well. But the close is the official trigger. So like this one, 99.50, close was 99.53. So this was the official trigger. And it happened to be the same bar that traded through it. So that was the trigger. That was hitting the first target, now pausing there. So this is raising the stop. That's partial profits or raise the stop or both. And that's final profits. And depending on where you are against or with trends or against trends, that's how you learn to play with that. People should join Discord. I completely agree, Lauren. You are welcome, Christoph. With that, I don't think there's anything I missed. We touched on Amazon, yeah. We touched on Nvidia. We touched on Microsoft. We touched on AMD. Is there one I'm missing? We looked at Tesla. I think we're good to go. We're looking good to go. So I just wanted to peek in at the notes to see where they finished in the dollar index to see where it is finished with the rotation back down. All right. And the VIX did get below that key 25 level. So unless we have a disaster, something from the non-farm payroll, I'm watching for the rally to continue. Not only do we have the doubles, you have the VIX breaking down. I'm watching for it to retest this 200 area. Yeah, see? VIX. Read your mind, Rich. All right, with that, I'm going to call it a day. Go out and walk the dogs and enjoy some of the finally nice Chicago weather. And I will talk to everybody tomorrow. By the way, please come back after this is over and leave some comments. And if you're new here and this information is helpful, please do consider subscribing and sharing the channel with other people you might know. Until then, I will talk to everybody tomorrow morning for non-farm payrolls. And have a fantastic night. Bye for now.